So there's been another debt warning for Europe's economists. They're fearing a calm before the storm for the continent's emerging markets. They fear that Portugal's bailout won't end the debt crisis. Capital Economics says fears surrounding Spain and doubts about smaller economies such as Belgium are raising the stakes. Now, while Europe's emerging markets have been left relatively unscathed so far, that could change if there's some form of euro breakup, and that could see countries such as the Czech Republic, Hungary, Romania and Poland triggering a new crisis.
Our concern generally is that if the next leg of the euro crisis, if and when it does come, and if it does come in the form of a trigger for Spain or something, that could trigger a more lasting sell-off in Polish assets.
Let's see what Poland's government makes of that. We're now joined by the Deputy Treasury Minister, Krzysztof Walenczak. He's been working with the Polish Treasury 3 years and is credited with driving the privatization process in Poland, including the recent float of the Warsaw Stock Exchange. Good morning, sir. Thank you very much for joining us. I mean, you heard what our guest said yesterday from Capital Economics, that the next leg of the crisis could spread to the likes of Romania, Hungary and yourselves. What's your reaction to that?
I think sovereign debt crises are fairly easy to predict because at the end of the day, they come from inability to service debt or to refinance debt, and that could be well measured. In fact, Standard & Poor's that just spoke does exactly that. Poland's outlook is stable, and that says a lot these days.
But
it's a good outlook to have.
As Moritz Kramer said, you know, post the election in October, you do need to implement structural reforms. You do need to consolidate your finances. Will those measures be undertaken?
Right. Poland is still an economy in transition, and our transition from the old regime is far from over. There are a lot of measures that the country needs to implement to further reform the economy, and hopefully in 2012 and going forward after that will be busy years for Poland.
Yeah.
But it's important to note that in terms of sovereign debt crisis, that Poland is one of the few countries in the world, in fact probably the first one in Europe, to adopt a government debt to GDP threshold in the Constitution.
55%.
55%,
yeah.
Right. That's why the sovereign debt crisis is probably further away from Poland than from other countries, because that threshold cannot be exceeded. And by all means, 55% of debt to GDP is a very manageable debt level.
Still, though, your deficit's 7.9%. You've got a target to bring that down to 3% come next year. Is that ambitious?
Come, I think, 2015.
Okay.
Next year, obviously, we will reduce that level. 7% or anything north of 7% is unsustainable, particularly in light of having the threshold. Yeah. That is not to be exceeded. So yes, indeed, there is a plan to reduce the deficit, and there is a plan to reach Maastricht Treaty criteria for euro adoption. Yeah. One of which being deficit being less than 3% of GDP. Right. 2015 is our target year to achieve that.
Looking at what's been happening within the Eurozone, of course, you do have ambitions to join possibly around 2015. Is it better right now to stay out of the Eurozone than actually want to be part of it?
It's an interesting question. Obviously, having your own currency in difficult times, in turbulent times, helps your economy to be more competitive. And indeed, Poland's currency depreciated in 2009 during the greatest upheaval, which rendered Polish exports more competitive, and that kept the economy growing. However, now as the continent emerges from the crisis, having a collective currency facilitates better investment decisions and therefore is good for business. And I think Poland was lucky in terms of timing in that regard, that it had our own currency in the most difficult days. But given that the crisis should be over, hopefully it is, the end of it is around the corner, having a collective currency is good for business.
Krzysztof, I wish we had more time. We will speak to you again hopefully soon. Thank you very much for joining us today. Krzysztof Walenczak there, the Deputy Treasury Minister of Poland.